And we'll also stop in the middle to be really interactive with questions. And we are also present our special topic, which we're going to talk about how the Fair Tax deals with government entities from a tax standpoint. Okay, so before we jump into the presentation, wanna launch a poll here. Want to get a sense of who we've got on the line with us. Got a number of people from a lot of different states, and we'd love for you to just give us a sense of, you know, where you're at in the presentation. You know, are you new? Are you an expert in this, or somewhere in between? And I just want to check with my colleague Larry to make sure that he can see that and he can.
It looks good.
Looks good. Okay, great. Got some people responding. Okay, good. We'll just give it about 10 more seconds here. Want to get 100% of the people voted in. We've got about 80, 90%, a couple more. Okay, great. I'm going to close it out here. So we got a pretty experienced group, well, about half and half. So good. So we should have a good mix of questions. Thank you for participating, everybody. Now it gives us a good sense of what we've got to work with and how to be most effective through the presentation. All right. So like one of the things that we like to say is that the fair tax is it's simple. And if you've got your eyeballs on the screen right now, you can see that our current tax code, yeah, to say it's not simple, like I don't know that you could put language to it. Like obviously that just doesn't cut it, doesn't do it justice. We've got something so convoluted that, yeah, just like it's so complex that no two CPAs could do this tax return the same. You know, that's been proven over and over and over again. And consequently, given the complexity of it, it's unfair. And what you've got baked into this is people with means or knowledge, they have an advantage. They're winners, and then there's losers. If you don't have the means to hire experts, or you don't have the capacity or the wherewithal to like be an expert in this tax code, I for one don't, you know, then you're in the loser camp. You know, people are going to have an added advantage. It's unfair. And like that in and of itself is a reason to create tax reform, but we've got bigger fish to fry with it, and we're going to share with you throughout as we overview the fair tax, we're going to share the 7 key elements that really create massive drag on our current tax system and how the fair tax solves every single one of them. All right, so here they are. So I've already talked about it. Convoluted, punishes growth and expansion and inspires the wrong behaviors. We'll explain this in greater detail. Lack of transparency. So there's a lot of loopholes. That again speaks to winners and losers. Horribly inefficient, impedes your privacy, winners and losers, we said that, and extremely time intensive. And we are going to remove each and every one of these as we move through this presentation. And like, you know, before I even say a word about it, for the 50% of you that are brand new or only moderately versed in the fair tax, if you just look at this screen and I say to you that I can prove that all of these things will go away and be solved by this piece of legislation we're going to talk about tonight, like where does your head go? I hope and I trust that it goes to a place of excitement. Like, wow, like, man, if we could solve all these issues, like we're going to have something that's really going to be something I can get behind. Yeah, and that's what we believe too, and why we've been behind this piece of legislation for a decade. Yeah, so you've got committed people on the line. All right, so let's look at it. So we've got legislation. It's HR 25 and S18. That's the how the legislation is known in the House and in the Senate. And let's look at how simple this is. 131 pages. Compare that to 75,000. Yeah, pause for effect. To be able to create a piece of legislation that's 131 pages that solves our nation's, one of our nation's, if not the number one, most convoluted, complex, and challenging, outdated system that has our federal government and our economy suffer as a result inside of 130 pages is nothing short of remarkable. And so you might ask, well, how did that happen? And the answer, and it's really important that you know this, is that $22 million of independent, nonpartisan research went into it. It is the most amount of money in the largest scope of tax reform research ever been conducted in the history of this country. And you've got well over a dozen PhD economists and some of the most brilliant economic minds in the country that were charged with creating this piece of legislation. So, you know, look, this isn't something that a couple of people threw together. Like, you have got something extraordinary. Yeah, and it's worthy of our time and attention to look at. So we solve that. So now we look at punishes growth and inspires the wrong behavior versus the fair tax that supports growth. So how does the current tax system, well, let me back up before I get to this. How does the current tax system punish growth? Well, just think about it. The more you make, the more the government takes. So look, at some point, individuals and businesses, for-profit businesses, for that matter, nonprofits, and individuals get to this place where they've generated enough revenue or income that has their basic necessities and at one level, and then the next threshold, you know, their wants covered, right? Like, they've got enough money to do what they need, and then they've got enough money to do what they want. Now look, at that point, if they see that their efforts for producing more and beyond that is going to be marginalized and taken more of, like, why would you do it? You would stop producing. So you've got to see fundamentally that we're inspiring the wrong behavior here. Whereas people and businesses that are really driven, man, they want to keep going. And at some point under our current system right now, they look at it and they go, yeah, it's just not worth it. So the fair tax really takes the lid off, and for the newer and the moderately versed ladies and gentlemen that are on the line tonight, what you want to know is that the fair tax is a consumption tax, not an income tax. Huge distinction, because there's a lot of tax reform platforms out there, and people confuse a flat tax with the fair tax. They're different. Flat tax levels the tax hierarchy, but it's still an income tax. And so you only pay taxes on what you spend, not on what you earn. And the fair tax eliminates all federal taxes and repeals the 16th Amendment, which gives Congress power to charge taxes or levy taxes on income, right? So personal and corporate income tax goes away. The payroll tax, i.e. Medicare and Social Security, taxes go away. The alternative minimum tax goes away, capital gains, death tax, estate tax, and probably a bunch of others that, yeah, they just aren't coming to mind. They go away. And we fund our federal government equally by instituting the fair tax. And we'll get to what it is in greater detail in a moment. But man, like, think about this for a second. You only pay taxes on what you spend, not on what you earn. Man, is that cool? Like, yeah, cool actually is your choice of words, and it is cool, but that's too casual. It's like, it's brilliant because we live in a consumer-driven society and we want what we want, right? And so, yeah, people who make more money are gonna wanna have nice things. Yeah, I'll put my hand up for that, right? I wanna drive a nice car, live in a big home, go on great vacations, wear nice clothes, and go out to eat a lot. Guess what? I'm gonna pay a lot more taxes than somebody who's more frugal than I am. It's fair. Yeah, it's just really fair. It's just a really smart component that was baked into this brilliant piece of legislation. Okay, more on the legislation itself in a moment. And let's look at the transparency and the fact that there's no loopholes in it. So look, there's only one tax, a consumption tax, a national retail sales tax on new goods and services at the retail level, right? So what that means is business to business transactions are not, they are not subject to the fair tax. So here's a really good example of it. I like to use the example of a home builder. So a home builder, a construction company, is a business, and they have to go out and buy land and bricks and roofing and a lot of wood, and you get the idea here, all the inputs to build a home. Well, that's the cost of goods to run their business and produce their product. When they go out and do that and they purchase those goods, the fair tax is not levied. They're not subject to paying the fair tax on that. Whereas when they build that home and they sell it to a consumer for the first time, it's happening, it's a new good, right? When a brand new build is sold to a consumer for the first time, it's a new good at the retail level. The fair tax is instituted and built into that, and the consumer pays that. And the home builder will collect the fair tax, and every month from all the retail goods that they sell, they will remit their fair tax that they've collected on all the purchases of their retail goods and services to the federal taxing authority. And when the homeowner lives in that home and they go to resell it, the fair tax is not levied because it's considered a used good, and over and over and over again for that property. So that gives you a good sense of how the fair tax is levied from a retail versus commercial standpoint. And it occurs at 23%. So look, if you buy a home for 100 grand and the fair tax is inclusive, meaning it's not on top, like you don't charge or multiply 23% on top of 100 grand. No, it's already included. Then the construction company is responsible for setting aside $23,000 of the 100 grand, and they submit that and all the others that they've collected, and they submit it to the federal taxing authority. Yeah, that's how it works. So look, there's a lot of benefits of this for business. So number one, we've got approximately $120 trillion. I mean, that's a lot of money. And that is just parked by private citizens from around the world and businesses from around the world. And we suggest that $1 trillion of that will enter into the US organically because corporate income taxes, personal income taxes, and capital gain taxes go away. Right? So that money is going to come back and people are going to start spending and investing in their businesses more. And the US becomes a corporate headquarter haven because we'll have the lowest corporate income tax rate in the world, 0. Yeah, so look, when you take the first two bullets there, you're going to have a massive increase in jobs. Think about it. Businesses are going to flock here to host and house their international headquarters. Construction's going to fly off the handle. It's going to create a lot of jobs. There's going to be a lot of new staffing needed for all the business expansion. And then all these new jobs will put a lot of money into people's pockets who are going to go out and spend it. It's like the most incredible way to what's the word I'm looking for? Instigate or infuse organically an immense amount of capital into our economy. Yeah, it's just brilliant. And then we've got the underground economy estimated at $2 trillion, and everybody who is avoiding taxes, avoiding taxes, they're paying their fair share when they go to the grocery store and buy a bag of beans, or they buy a sports car or a brand new home or whatever it is, right? So every single person, documented, undocumented, criminal or ethical, like they just pay their fair share. So it's just, makes so much sense. All right, and we've got a super efficient way to have this thing happen. So first of all, you'd want to know that for every dollar the IRS collects, it costs them a quarter to collect it. So it's really inefficient, right? Like it's 25% margin in that, or cost in that, not margin, cost in that. And it's pretty weak. So you've got right now a state sales tax system that's already implemented. 45 states currently collect a sales tax. We can leverage that infrastructure. So a state sales tax bureaus will be created in each state, and they'll be and funded by the federal taxing authority, and they'll be responsible for collecting the revenue. So it's like we've already got this infrastructure in place. And then we collect from only 18 to 20 million businesses instead of 120 million households. Like that's 80% more efficient right there. There's only one form to fill out. What are your gross revenues times 23%? That's the money that you owe. So that's the money you owe. Send it in every month to your state sales tax bureau, and they'll funnel it up to the Department of the Treasury. Yeah, it's like, wow, we're getting really smart here when we implement this. So I've said some of these statistics. Actually, not all of them. The IRS costs $13 billion to operate. They only collect 75% of what they should, and the fair tax would eliminate the IRS over a 3-year period. That seems like a good idea. So look, you pay your taxes when you make purchases. That's it. You don't have to no filling out detailed income tax forms. And look, when I first learned about this, I said, wait a minute, you're telling me I don't have to be thinking about the tax implication of my business decisions every day of the year as a self-employed business owner. I don't have to have meetings with my tax attorney regularly and then spend a whole bunch of money on that. And I don't have to keep track of all my receipts. And it's like, that's it. Like that's the byproduct of it. It's like, dude, even if this thing isn't financially put me in a better place, which it does, like I'm in. Yeah, because I can go reinvest all of that time and money into making what I do better. Yeah, it's brilliant. So let's talk about fairness. There's an element of the fair tax that's been put together called the prebate that assures no one, regardless of income level, pays federal taxes up to the poverty level. So let's look at this for a second. I'm about to show you a chart that quantifies and communicates exactly how the prebate works. So you look on the right side here. And let's say you've got a couple with 2 children, so a family of 4, so a 4-person household. The Department of Health and Human Services inside the federal government, they publish poverty guidelines. And these are spending thresholds that basically says, if you look at the green line, if you're spending 32 grand, roughly 32 grand a year, that is the amount of money a family of 4 would spend to just meet their basic necessities. You know, they're basically just buying food, paying their rent or their mortgage, medical supplies, and transportation. Like, you're just barely getting by. And so if you multiply that number times 23%, you get an annual prebate, or an annual, the amount of money this family will have paid in taxes under the fair tax will be $7,470. And then if you divide that number by 12, see, what's going to happen is the federal government is going to direct deposit $623 into your family's bank account every month at the beginning of the month, reimbursing you in advance for the taxes that you paid on your basic necessities. And everybody gets it as long as you qualify with a valid Social Security number. Doesn't matter if you're making $1 million a year or 10 grand a year. You get it. It's part of the fairness, right? We untax spending up to the poverty level limit as set by the Department of Health and Human Services. So if you think about this for a second, guys, let's look at it. I said earlier, and I said it pretty quickly in passing, if this thing doesn't put me in a better financial position, but it does, but it has me be more efficient, like I'm in. Well, let's look at the financial impact. So first of all, because income taxes and payroll taxes and employer pay taxes go away, there's no more withholdings in a W-2 employee paycheck. So if you're making $5 grand a month gross right now, you probably go home with somewhere between $3,800 and $4 grand. Well, when the fair tax gets implemented, you take home $5 grand, like all of it. There's no more tax withholdings. So the average American's income goes up by 29%. That's a lot of money. So you got more disposable income there. You got the prebate coming in every month, reimbursing for the taxes you paid on poverty level spending. You can save money and by being frugal by buying used goods. And what you've got is an entire country that is lined in their pockets more so instantly overnight than they were when the current tax system was implemented. Like, this isn't small. This is a big deal. Yeah, people are going to save more and have more money to spend and invest, and you could see the ripple effect that's going to occur from there. If you think about the housing crisis, I don't remember exactly what the number was, but it was somewhere between, if the average American's income or disposable income were increased by somewhere in the neighborhood of $500 to $600, like, it would have helped somewhere in the neighborhood of like 75 to 80% of homeowners who lost their home in the housing crisis. I mean, we're talking about saving the financial meltdown from happening. That's what we're talking about, the impact here. Yeah, so we've got something that's really brilliant here. So let's look at the impact on prices, and then we're going to take a break. And we're going to get to your questions. All right, so you got to understand right now that business income taxes and their cost to comply to the federal tax code, consumers pay for it. We pay for it. It's like, yeah, a business calculates based on, past performance, past taxes that they paid, and they estimate their tax in the future, and they go, okay, how much do we need to raise our prices on our products and services so that our costs of taxes and complying to the tax code are covered? We pay it. So that's what we call an embedded tax. And it's approximately 22% average across all industries in the retail sector. And what happens is that the embedded tax of 22% comes out because income taxes and payroll taxes and employer pay taxes go away. And therefore, the business income taxes and the cost to comply to the tax code is eliminated. So this 22% of embedded tax, it's out. So that's out. 23% fair tax is in. So you got to know that prices are not going to go up by 23%, but they are going to go up. And we got to tell you that they're going to go up by probably 10 to 15% maybe in the first year. And likely there's a lot of math in here that, you know, probably don't have time for, but if you just look at all of the dynamics at play, it's not a perfect swap. And they're going to go up because the businesses likely want to hedge their bets, and they want to make sure this thing really works. So, and when it works, and you know, people get more disposable income and they spend more, and businesses start to thrive, they're going to really take a hard tack on acquiring more customers by lowering their prices. And within a few years, we will have prices at the exact same level as they are today, and we'll have the fair tax. So we've handled it all. We've removed all of the burdens and the drag, and we've told you how the fair tax really serves businesses and consumers. So, like, why wouldn't we do it? Well, guess whose income is derived from our current tax code, or like has some contingency upon it? Yeah, the politicians want to keep it the exact same way, and 50% of lobbyists are tax lobbyists. Yeah, they don't want anything to change here, guys. So they really lobby hard to keep this thing how it is. And as a result, they get in the way of something that could be the biggest economic difference for the vast majority of Americans ever bestowed upon our country. Yeah, it's sad. So look, when a politician says, you know, I vehemently oppose the fair tax, you've got to know that they're only doing it out of self-interest. They're trying to protect themselves. That's it. All right, so you've got some things to think about, people. In fact, I want to launch a poll before we go to your questions. I want to launch a poll here. And we want to know, what is the most important element of the fair tax that maybe you've heard right now for the first time, or in general, tax reform, period? Like, what is the most important thing for you? So I'm going to give this about another 30 seconds here. I want everybody to weigh in on this, like really consider this. Okay, I'm going to close this out. So if you haven't voted, vote now. 3, 2, 1. All right. Oh, check it out. That's pretty interesting. Pretty interesting. Like, if you can put us in a better financial position, we're for it. I love Americans. This is like so cool. Oh, Larry, I don't know about you, but I'm like, this is inspiring me.
Sounds like they get the picture.
think so. Yeah, thank you for voting and weighing in. All right, so let's move to some questions, Larry. Keep yourself off mute.
Got it.
All right. All right. Hang on. Okay, so so a question comes in from Andrew. How do I get a list of individuals in my local area zip code? Yeah, I'm not sure what I'm not sure where that's directed, Andrew. How do I get a list of individuals? Like, what do you mean? Like, what do you want to do with that? Yeah, if you want to write in and expound upon that, we would be happy to answer in any way we can. How do you handle the home deduction? So I am assuming what you mean is that there's people who are resistant to the fair tax because they think, oh, the income tax deduction around your interest, that goes away. You can clarify if you want something else, Andrew, but if that's the case, it's like, well, actually, Larry, you got a really straight response on this.
Well, Andrew, the point is, if there are no withholdings from your paycheck, what is there to take a deduction on? That's the first thing. The other thing is, the economists that did the research within that $20 million that Mark talked about, they had found that only 30% of those who are qualified to take the deduction actually file out the tax return in order to do so. So, a third of the people are the only ones that are interested in getting the deduction, but you're taking home your whole paycheck without any deduction, so there's really nothing to file a tax claim against, and you're taking home more money to begin with because there's no withholdings from your paycheck. So you're in a better position all the way through. You're paying your interest now. You're paying your interest under the fair tax with pre-tax dollars in today's terminology, and that puts you in a better position right off the bat. You should be able to pay off your mortgage faster if you chose to take some of that 29% additional take-home pay and put it toward your mortgage principal each month or twice a month or whatever you choose to do. Or you can invest that and let it grow for you. If your company has company matching for your 401k, for example, put more money into your 401k so that they're putting more money into it for you. I mean, there's a lot of things you can do with it. But to directly answer your question, as Mark said, there's just nothing to take the deduction from. Mark?
Yep. Comprehensive, like I knew you would be, Larry. Thank you. So you wrote in, Andrew, a little bit more so we understand. Yeah, so you're saying, man, if I had a list of everybody in my zip code, I could do something with that. I could create groups and meetings and organize some things. Yeah, so I hear you. I don't know the answer, and I think part of the answer is people don't want to be found. It's like
everybody's hibernating today, aren't they?
Yeah, so like there's privacy that we've got concerns with that we've got to honor. And look, this bill is like every other bill. It's grassroots. Well, I shouldn't say it's like every other bill. That's actually not true. That's inaccurate. But like what's going to make the difference here is enough people knowing about it that they go put pressure on their elected official and say, hey, like, look, you only get my vote if you're a co-sponsor of this thing. Like, this thing's smart. Let's go do something. And we don't need everybody, guys. We need, what's the number? 3,000?
About 3,000 in a congressional district, yes. 3,000 in a congressional district. 3,000
people in a congressional district to pound on their elected officials saying, we want this. and then they pay attention, and they see that their job is like on the line here.
Andrew, I have a question for you. Where are you from?
He's in Florida because he's got
Oh, Andrew's in Florida?
yeah.
That was an 862 zip code he gave us, though, wasn't it?
The 3 in front of that.
3862?
38672.
386.
Yeah, let's take that offline. Let's keep moving here.
Andrew, if you have any relations whatsoever with the supervisor of elections in your county, or if you belong to the local Democratic or Republican club, as the case might be, they may be able to help get you a list of at least some of those people in the county that are active in politics, which would be a great way to start. The other thing you can do, there's probably a newspaper in your area that's circulated pretty readily, and there is the ability to get free posting of certain types of announcements, clubs and other meetings of that type, and you can find out who to contact at that newspaper and create a meeting of your own. First, you have to find a place to meet. In Florida, or at least in Seminole County, we have the county sheriff's department.
He actually wrote in, Larry. I stand corrected. He's in South Haven, Mississippi.
Mississippi. Okay. I was hoping he might have been from North Carolina. The county sheriff here has offices throughout the county with a community room in them, and they are available at no charge. So, there's a couple of ideas for you. And if you need more help, send me an email, and you can we can dialogue on this a little bit and get it offline. Mark.
Thank you, Larry. Yeah. So Andrew also asked about medical services. Yeah. So medical services are taxed, Andrew, because if you think about it, who's purchasing it? Consumers. It occurs at the retail level. And every time a service is rendered, it's like happening for the first time. So in other words, it's new as opposed to used. And so medical services are taxed. Yes, they are. If there's anything you want to add to that, Larry, go ahead. But I think that's pretty straightforward.
Yeah, there is something I would like to add. Andrew, the research that was done actually found that the embedded taxes in the price of everything we buy today was from 20 to 25%, depending on the industry. The medical industry was one of those that was at the 25% level. So their costs, in fact, everybody's costs are going to go down, and Mark mentioned this early on, everybody's costs are going to go down before the fair tax is added. So yes, the final cost, you might go up about 10% in the medical case, but you're bringing home 29% more dollars. So you still have more discernible income to work with. And you're not going to feel any bite there. Mark?
Yeah. So look, a lot of comments here. We've got one thing minimum wage hike advocates don't understand is tax withholding. If they want an increase to $15 an hour so people can take home $15 an hour, then they should support the fair tax. Love that thought. Thank you, Josh. Yeah, Ken has written in pretty vehemently that it's like, hey man, like we need to advertise this. Nobody knows about it. Well, some people know about it, but absolutely not enough. I mean, that's obvious. And we're all for it. So we'll actually get to advertising in a second, Ken, so sit tight. Joe wrote in a question, how would you ensure small businesses that their competitors are also subject to the tax? You have to enforce by industry, is that correct? So, yeah, like, look, yeah, I've got some competing thoughts on that, Larry. Do you have a real really tight answer for Joe?
I'm
Joseph?
sorry, I was addressing something else here. What was the question from Joe?
How do you ensure small businesses that their competitors are subject to the tax, or at least paying the tax? So he's asking about enforcement.
You don't have to insure it, Joe. The businesses will do it on their own. If you have a bakery and I have a bakery, and you decide you're not going to lower your prices, and I decide I am, so I can take some of your client base, as soon as you realize you're losing clients to me because I lowered my prices, what are you going to do? Now, you don't need to answer that. We know the answer. But that's exactly what's going to ensure it. Just good old free enterprise, the competitive marketplace. Mark?
Yeah, thank you. Yep, corporations don't pay taxes, individuals do, right on. Okay. Yeah, Larry, Randy wrote in, won't insured medical expenses and Medicare services, since they are third-party business-to-business, not be taxed?
That is correct. Insurance benefits are not taxed because the premiums are. So you've paid for that benefit and it will not be taxed.
Yeah, thank you, Randy. Thank you, Larry. Okay, let's look at, so keep thinking of questions, write them in. We're going to review our special topic here. And I also said I was going to get to advertising, so we'll get to that in a second. All right, so governments under the Fair Tax Plan. Yeah, look, this is really straightforward. We're going to move through this pretty quickly, and we've got a purpose for having a special topic about this, and we'll tell you that when we've explained some things. So, okay, so how do governments, so we're talking federal government, state, local, how do they pay taxes today? They pay them directly through the federal income taxes deducted from each government employee's pay, right? So you work for the government, you've got tax withholdings, right? And through the payroll taxes collected from both the employee and employer for Social Security and Medicare. So that's how the governments contribute to the federal government, including the federal government. So look, whether you work for the local, state, or federal government, all those people who work for those entities pay taxes. You know, and that is the mechanism by which those government entities directly contribute to the federal government's coffers. Okay, so that's pretty straightforward. I think we get that. And so then you ask the question, now actually, before let me do this. Why does the Fair Tax tax governments at all levels, federal, state, local? And the answer is because every government of the U.S. pays federal taxes today, and we rely on that money. We got to replace that. So in other words, if we remove we take away income tax and payroll taxes, well, as you can see in the second bullet point, there's 22 million government employees. You know, that's 15% of the total non-farm workforce. It's a lot. So if we just said, okay, all these government entities and the people that work for them, they don't, you know, have to be subject to the fair tax. It's like, wow, we're really losing a big part of our base. We gotta, you know, we've got to impose the taxation, the fair tax on government entities to recapture that revenue, and B, it's fair. Yeah. So, and the thing I was going to say earlier is I pulled this information from two people that produced white papers around these topics, Dr. Karen Wallaby and Larry, who was the second person that contributed that you sent me?
Oh, Carrie Bowers.
Carrie Bowers. Yeah, thank you. So Carrie and Karen, just two supporters, loyal, and brilliant minds around the fair tax. They've really done a lot with it. We thank them. and I want to give them credit for the information that we pulled. Okay, so we know how the governments pay taxes today, and we recognize that they make a substantial contribution to the overall tax revenue collected, and we've got to recapture that. It's a big opportunity. So that's what you're seeing here. And so how does this occur under the fair tax? So you've got government enterprises and non-enterprise government entities. And so if you look at it, you've got like a government enterprise, like is the U.S. Post Office. This is an enterprise that runs where it caters to the consumer. Post Office is a perfect example of it. And they get treated like a for-profit entity, right? So in other words, when they sell to the retail consumer, they are responsible for withholding 23% of their revenues on new goods and services and remitting that. And when they have business-to-business purchases, they don't have to pay fair tax on that because the fair tax isn't levied in a business-to-business transaction. And then you have a non-enterprise government entity like a fire department, and they're treated differently. And there's some complexity in there, and I would actually ask Larry if he's compelled or has the intel in it, if you know the difference, because it felt a little convoluted to me, and that's where I felt like we were getting into some of the minutia of it, and I wanted to be really clear with people or just leave it.
I don't have any clarity that you don't have, Mark. I've gone over that a couple of times, and I thought I understood it, but I could not repeat it.
Okay. So, you know, I think for my purpose as the presenter, we wanted to give this to you because we wanted to show you that the government entities or let's say the entities that call themselves recognized governments, municipalities, state governments, federal, yeah, they're playing by the same set of rules. That's what we want to demonstrate here. And it's important to have that happen because it's what allows us to keep the fair tax rate at the rate that it is. When we start exempting industries or whole industries or governments for that matter, man, now we're opening up a whole can of worms, and we're going to have people lobbying to be exempted. So, yeah, that's what I wanted to contribute and communicate in this part of our special topic. Larry, is there anything else you'd like to say about it?
Yeah, one of the things that, one of the reasons that government is being taxed is you have to understand that the payroll taxes that they are contributing now to their employees, and this is going to talk about the non-enterprise ones mostly, if they're not going to have to pay those any longer, and they're also not going to be paying the embedded taxes that are in the current income tax system because they go away. But governments, both local and federal, do provide some services that are in competition with the private sector. If the governments were not taxed under the fair tax, they would have a great advantage over the private sector in pricing their services, and it would be a real catastrophe for those small businesses and large within the private sector to try and compete with them and make a profit. They wouldn't be able to do it very well. So there are certain taxes that the government will pay on their employees' salaries because we're looking at the fact that the employee is providing a service to the employer and is being paid for it. So if services are taxed, that's where the government is going to be paying a tax also. Mark?
Yep, thank you, Larry. Okay, great. So look, we want to talk to you about, and we want to continue to answer your questions, so write them in as they come up for you. And now we want to talk to you about, like, let's move the needle on this. What do we need to do? So we've got some things for you to do. So for starters, like, this is a great thing. You can email the president. And again, with enough hits on it, they start to pay attention. So we give you a website for that. Write, email, phone, and visit your congressperson. And make it personal. Mass marketing doesn't work, and be consistent. Don't go away. And the other thing to do is to get involved. So it's like, man, if this aligns for you, you are saying in your brain, gosh, this makes sense. We'd be better off financially. I see it. It's better than what we've got. It would make a difference in our country. Then you've got to do something about it. Otherwise, I'm sorry to say, and to be so direct, you aren't any different than the millions of people who weren't on this webinar today. Yeah, it's great to be educated, but this is something that needs to get enacted in order for it to have an impact. It needs action. So we request your action if it aligns for you. And we have a poll that we want to launch. We want to ask you something. We want to know if you contribute financially to charities and causes that are important to you. Are you someone that, whether it's a charity, whether it's philanthropic or it's profit related, even if it's you take a stand around, let's say the environment, and you choose to spend your money in places and with companies that really respect the environment, whatever it is, you take a stand for causes. We want to know if that's you. And there's no judgment here. We just want to know who our audience is. Okay, so I'm going to close this in 5 seconds. So vote right now. 3, 2, 1. I'm going to close it. We've got, great, most of the people voted. Yeah, so everybody. It's great. And it's no surprise, given that you'd be willing to spend your evening and take an hour or more out of your evening and away from your family or whatever else is important to you to really learn about this. Learn about something that could make a difference. So thank you. Yeah, so look, there's a possibility and an opportunity for you to make a contribution. And it's called the 1040 Club. And it's really simple. You go to FairTaxorg and you scroll to the right or under join, and you just join the 1040 Club. And that means that you'd be willing to put forth $10.40 every month to support this piece of legislation. And look, if we get another 10,000 people to do this, contributing 100 grand plus a month to our FairTax coffers, guys, what we can do is exponentially more than what we can do right now. And so Ken said, man, we got to advertise this. We got to have way more people know about it. Totally agree. And that takes money. So if this aligns for you, if it's better than what we've got, if it makes sense, then we request that you get off the fence with it. Yeah, go to fairtax.org, $10. If you think that's a lot, then, stay away from Starbucks 2 times a month, and you'll have your money to contribute. And it makes a difference. It makes a difference. So we're here. We are asking you if this aligns for you. We request that you go to fairtax.org and you join the 1040 Club and invest $10.40 a month. That's it. Yeah, so look, we have so given what you've heard tonight, we want to know how we did. And we've got one more poll. Based on this presentation, can we count on you going forward to support the fair tax? Vote. Oh, you know what? I got to launch this again. I hit the wrong button. Sorry, gang. Yeah, I don't think I'm going to be able to launch it again. I bonked the wrong button. I closed the poll. Yeah, Well, look, you have our request. So whatever the answer was going to be, yeah, it doesn't really matter at this point. It would have been really interesting to see those results, and we want the feedback. We want to know how we're doing. So, write in and respond to the email that you'll get in the follow-up and just tell us how we did. And we'll know by tomorrow morning at 6 a.m. when, if we've got, a whole bunch of new people subscribing to the 1040 Club. All right. So let's see if we've got any more questions. Larry, anything else you want to say before we go to any final questions?
Yeah, you might, you folks, if you go to congress.gov, G-O-V, you can look and see if your representative is a co-sponsor of the legislation. There are 45 House representatives that do sponsor the legislation right now, and you can find out if they are, and if they're not, you can write them accordingly. And if they are a co-sponsor, when you do write them or call them, whatever you do, be sure to thank them for being a co-sponsor and asking them, can't they do a little bit more to help advocate for the fair tax rather than just letting the conversation circulate around the tax plans of the president and the Speaker of the House. Mark?
Yeah, great. Thank you. And Larry, let's address Andrew's question/concern, and I really appreciate this. He asked, how are my contributions to the Fair Tax organization utilized? I want to feel more comfortable with your organization prior to contributing and would like to meet individually. So, yeah, we could cook up a meeting. Like, you come to Florida, or you can go to AFFT headquarters. I don't know actually if they're still in Houston now that I think about that, but we could cook that up. But let's talk about how they're utilized. Larry, could you speak to what you know of as to how AFFT and FFTEA, how they use, that's Americans for Fair Taxation, that's the national organization, and the Florida Fair Tax Educational Association, both nonprofits. How do you know that that money's being spent?
Sure. Okay, the first thing I want to tell everybody is that both Americans for Fair Taxation and Florida Fair Tax Educational Association do not have anyone on payroll. Everybody is a grassroots volunteer. The president and headquarters for Americans for Fair Taxation is now in Clearwater, Florida, no longer in Houston. So he's kind of local to you out of Mississippi. And you can email Mr. Ken. I can't think of his last name. Can you believe that? Kenneth Hayes, and he's a tax attorney and is the president of the organization. And I can tell you that he is very, very cognizant of the amount of money that is coming in and what we can spend it on. Right now, all of the funds we get are going towards maintaining the database, our website, and other things of that nature. We have very little available to go out and try and seek advertising on mass radio or TV. Both of them are pretty expensive. And that's what additional support is, and additional contributions would go for. If you know somebody who is substantially wealthy and you think that they would appreciate the benefits of the Fair Tax program, maybe you ought to talk to them, and they might be somebody who'll just write a check for $10,000 and send that over to Americans for Fair Taxation.
I was thinking 10 million.
Yeah, you know what? Well, if every fair tax supporter, and there's several 100,000, would buy one Powerball ticket or two Powerball tickets, but contribute 50% of their earnings to the fair tax, we would be able to go on TV big time and make things happen fast. Beyond that, I'm not sure how we're going to do it other than a lot of hard legwork by us as individuals. Mark?
Yeah, beautiful. All right, everybody. We appreciate you. We thank you. Yeah, not Ken Hayes, but Steve Hayes is our leader. Larry.
Did I say Ken?
Yeah.
All righty.
Yeah, thank you, Ron. Appreciate you. Yeah, so listen, thank you everybody for being with us tonight. And listen, I can't speak any more clearly than this. We want you to be in action. If this aligns for you, go do something about it. There's, we showed you a bunch of ways. We need your help. 10 people here, 100 people there, 1,000 people. We do that every month. Like, wow, this thing really starts to get momentum. So your voice, your contribution, your financial support, it makes a difference. Please contribute. And as always, I appreciate Larry for your commitment and your passion. And I appreciate our friendship. And I also appreciate all the men and women behind the scenes. We got a big team promoting this and doing a lot of work.
Yeah, we've got Elaine sitting back there trying to bail us out too when we goof up.
That's exactly right. Yeah, so thanks to everybody on our team as well. All right, fourth Thursday of every month. Come back next time. Bring a friend. Everybody have a great evening. Talk soon.